Well, welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. In analyzing potential investments, it's important to understand their business model and how well it meets the venture investor's requirements. The business model consists of unit and customer acquisition economics, as well as the market and business economics. Unit economics is the cost to provide a product, which drives gross margin. This determines how much revenue is left to cover the business expenses. In general, 40% gross margin should be the floor. Customer acquisition economics is the cost of acquiring a customer, which drives scalability. This determines how much you have to spend to grow sales. In general, your cost of customer acquisition should be 1/3 or less than your average customer revenue. Market economics is the cost of penetrating a market, which will drive fundraise requirements. This determines how much funding you have to raise to capture a portion of the market. You must show a growth rate of at least 50% year over year to continue raising funding. Business economics is the cost of running the business, which drives profitability. This determines how soon you can achieve cash flow positive and no longer have to raise funding to stay alive. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start up something today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.